Morning everybody, it's Chris here from Serene Education with the 4 major analysis update for the 7th of June 2011. Going to be starting with the Euro against US dollar on our CTC strategy. Let's have a look at the daily. Okay, after yesterday's pullback, we've now seen the Asian market move slightly higher, pretty much on a support. So it's actually forged the support. I think that's a 38.2% fib retracement area if I'm not mistaken. Sorry, at 23.6, apologies. So as it stands now from this initial move to the upside after the pause, it's now retraced 23.6%, and we're now testing a slight consolidation in the past for this pair. And what we'd like to do is obviously see price continue to the upside. You'll notice that on this time frame here that the trend is still to the up. We have swing highs, which dictates an uptrend. Notice that the price is coming from a low point and swinging higher after a massive pullback. This pullback here coincided with the 50-period moving average, 50% fib line, apologies. And we've now seen price return to the highs, forming new swings to the upside, and now we'd like to see price continue that drive. Ultimate target would be to start with just above the 14,800 and then ultimately topping out at 14,9500 for this pair. So as momentum stands now, the trend, as you can see, is swing highs and to the upside. Now it's sitting on this little plateau here. Ideally we don't want it to break below the 23.6%. If you can close higher than that, then we can see a definite support area being forged, which or a platform that price can continue to the upside from. So price can't fall lower than the previous candle's low. So this low of this candle here at 14,5600. So we'll use that as an intraday marker. There we go. We'll put that in. So on our hourly chart, that's going to be our marker. So price has to stay above that during the course of today. If it trades below that, then we know we are in for further downside movement, and we should be looking for opportunities to the upside or to the downside of that. There's another one over here, for example, prior resistance, bit of support, consolidating, and then further upside movement. There's another one over there, a small consolidation there. These would be ultimate targets to the downside if price had to break below that 14,5600 mark. You can see the swing highs dictating price movement to the upside. There we go. Bar this breakout here, we have swing highs, and we're now testing that we're above this area. Notice on the small time frame we've had a small pullback, swing low, and we have had a break of that above that now. So ideally CTC, we'd like to try and look at the next target being just above here at 14,6600 as our first target for this pair. Notice we've formed another swing high to this. See, I'm just putting it together. It's bounced off both all the moving averages. So ultimately our next target would be the top end of this candle here at 14,6500 to start with. The break above that would definitely be in neutral territory, and we should be looking at further gains to the upside for this pair. CTC on all the other time frames is positive. So for Euro, positive again across all the all time frames, which bodes well. So as long as it's trading above 14,5600, then we should be looking for upside movement to at least 14,6560 to start with. Okay, next pair up is sterling against US dollar. Let's look at the daily. Yesterday we had a pullback. This primarily came about because if you look at the larger time frame, you'll notice that the major trend is well to the upside, and the intermediate trend, because we had a swing low here and we come from a high, is to the downside, and primarily because price was trading at that resistance level yesterday, it needed to do a hell of a lot to get above it, and any sign of a pullback would have been an opportunity for short, and sure enough we got that yesterday as price was unable to break above that. So price is now testing, trading very shallow now on the Asian market going into the European session open. It's 7 a.m. GMT. You'll notice that price is now trading very flat between the 20 and the 50 period moving average. A failure to find support here and a close lower than yesterday's close, at least 1635.50, would definitely signal an opportunity for possible short today, but be aware that the price swing will have to be breached first. So ideally rather hang tight and look for a close lower than this candle here, the swing candle from 3 days ago, which should be in the Thursday. So the low of 1630.70, close lower than that, would definitely confirm that we're looking for downside movement. Notice that there is a red arrow forming above the top of this daily candle. However, this candle hasn't closed yet. Got to see a close first, confirmation, which probably would look for an indication of intraday sellers for bearish sentiment. But a close on a daily time frame for this here, lower than this candle here at 1630.70, would definitely give us an opportunity for possible shorting opportunities for the remainder of this week, if and when it closes lower than this candle here. So intraday, make a note of that. There we go. That's where it needs to close lower than. You can even move that one lower. If you want to go all the way down to 28, 25, it's entirely your choice. But it needs to close personally below that level. We had this is where price failed to break that price swing. So on an hourly chart, that's what the trend line would be doing, the intermediate trend. And because it failed to break higher than that, then obviously what we did to see is consolidation roughly around a price support and resistance level, and price reverted to the downside. And as of going into Asian market trading, we've seen price pull back slightly, but saying that, it still hasn't broken above its Asian high, which is, as we speak, in this area here. So price would need to be trading above that, which is taken above at 1636.60, and we could be looking for another reattempt of this intermediate trend line to speak. Failure to do so would see resistance at this level here, and where there's resistance, then there's opportunity for possible trade to the downside. If it breaks below, then they're always seeing as a pullback and the continuation where the price has come from, and ideally the lows around 16,300 would be an opportunity for shorting. Notice the CTC is extended in our favor, and we're trading below all the moving averages on an hourly time frame, so it must do exactly the same on 30 minutes. Our entry candle, notice that it hasn't traded higher than the Asian market high, so 1636.60 would be, but notice the moment it breaks above that, we have two very important moving averages above it, strong ones, the 200 and the 50 and the CT. So be aware, we might, if there's any breakouts, we could have a fake out for price to pull backwards. So we definitely need a juicy bullish engulfing pattern to the upside to confirm that there's momentum now shift, and we're going to be a reattempt of the intermediate trend line that we saw on a daily to the downside as potential target. Otherwise, what we do is see as failure here at 1636.60 or 1336.50 area, only for price to revert to the downside. Next up is the US dollar against Swiss franc. So look at the daily, you can see the swing lows on this pair on a daily time frame being dictated by this intermediate trend. Swinging low very recently. The major trend, however, is still very bearish. You can see that. Very, very bearish. In fact, if you look at here, looking at the ultimate swings to the downside, you can see that trend is very bearish indeed. And beautiful swings lower. Great opportunities. Nice support, breakout, continuation, pullback. It's fantastic. Moving averages evenly spread out, confirming a very strong negative trend. And you can see that the intermediate just recently, a very strong downside movement after a pullback that occurred in early May and failed to materialize, and we saw price revert to the downside. However, the trading range has got slower, even though we have had slight momentum shifts, and we're seeing one right now as price is trading at the floor end of this candle here, the low at 83350. Indecision candle yesterday, slight pullback, failed to materialize, and Asian market last night going into the European session this morning, we're seeing indecision candles, so we could see further momentum lower if we see a break and close lower than the Thursday's candle of 83350. So let's put that in our intermediate, so 83350. There we go. Or if you want to go for the wicks, 83300. There you see it. 50 pair moving average acting as resistance level for this pair. Notice well extended to the downside. The major time frame trend for this, which would be our intermediate on a daily, is very much to the downside. So you shouldn't be looking for any buying opportunities until we see a breach of a very strong swing low. In this case over here, the major swing to the downside would be around about the 8380. So it's going to be trading above that level there in order to be confirmed as a possible bullish signal, and then we could obviously look for target areas being the prior swing to the downside here at 88450. But until such time, look for a breach. CTC is extended to the downside, so if we see a close lower than 83300, look for further extensions to the downside, because we are very much in a negative trend for this pair. So a breach above 83800 would definitely confirm that we're looking for a possible pullback scenario, but be aware that the downtrend is very, very strong, and a breach of this would take a lot of effort to do so, and if it didn't, we might see consolidation for a while before we see any upside movement. You can notice here on an hourly chart intermediate, so be aware of it. Targets got to break below 83300 before we see any further extensions to the downside, and we could possibly get that if we look at that as our initial start. This is the pullback, and this would be our extension. 61.8 would take us to around about 831. 100% is not even on the chart yet. Let's see if I can pull out 100%. You're looking just above the 8256 mark roughly. Last pair of the day is US dollar against Japanese yen. Let's have a look at the daily. Pair's been falling nicely, and it's now reached the target of 80 yesterday, and we've seen a slight consolidation on that. Are we going to see another bounce to the upside because we've seen it in the past? This is the question. If you are looking for possible trades, rather wait to see a confirmed break below that to see any progression further to the downside. Otherwise, what we're going to see is consolidation. We've had it in the past where we've seen a bounce above 80. We could see it again. There's no reason why, even though we're on a negative, the CTC is negative, however, we're in a consolidation range in a negative trend. Ultimately, look at that. From May of last year, you can see the price is moving sideways, bar. Notice that the highs in this bar, the initial break or the intervention that we saw in early April, notice the highs overall are still falling lower. So price is going sideways, but going or trading within a range, but the highs are getting lower as we move in this sideways motion. So momentum is still shifting downwards, even though we are trying to find support at the 80 mark. So have to see a breach of 80 before we even think about going short again for this pair. Otherwise, we could see another reattempt of highs, and we could have another swing high back up here to at least the 8200 mark, because the trend line is there, the intermediate trend line is here, and we don't want to be faked into any trade. So we definitely need to see a confirmation break below 80 before we even think about going long short again. Otherwise, we could see consolidation here and with possible uptrend, and that swing low here, you can see that swing dictated. So a breach of that, ultimately, if that was to happen, then a possible target would be, there's no this small intermediate trend at around about 81 to start with. A break above that would see the 8200 being tested for this pair. So look for consolidation and possible trades to the upside. A good one would probably be the previous swing or support area, this roughly around the 80 mark. to start with for this pair for upside movement. So let's have a look at the intraday. Notice price has broken about 50 period moving average, which has acted as a resistance for a while, and is now testing the highs of yesterday. It's now trading above the 50, which is a good indication. We've seen a breakout, consolidation, a pullback, and now we're seeing almost like a consolidation bar occurring. Notice that in the last couple of hours, forming swing highs. Notice the CTC is still extended to the downside. However, we're now trading above previous swings to the downside. So it's now breaking that trend. So we broke this one over here, and now we're breaking a second major one. So if we can find support, and if it can be trading higher than these highs that we saw here, will definitely bode well, and we could see price definitely pushing higher, with the likes of the 80-70 mark as a possible first-time target for this pair, for this or today or this week at least. Where we're now testing the 80. So 80 we know is a strong long-term support area for this pair, and it's got to break below that in order to confirm further downside movement. Otherwise, what we're going to see is another attempt of at the 8200 mark, because we've been in the past just recently. So keep that in mind. Okay. So as it stands now, we need to see a confirmation break above this to see extensions to the upside. CTC will probably go blue across the board if this comes about, but until such time, then we bide our, just wait, take your time, and just wait for the price to do its thing before we actually get involved. That's it for today, guys. Hope you have a fantastic trading day. Keep your trading simple. Make sure you follow the rules of the CTC. Make sure that your money management rules also stack up against that. We don't want to be trading with an inverse risk reward on these trades. Primarily because the CTC in much is a lagging indicator, so be aware of that. Most importantly, enjoy your trading and trade serenely.